are we going to see the windows crack open broader? Because you sat here in August of 2024 and we were hoping the same thing.
We were hoping that, and I think where we sit today is the VC-backed IPOs are coming, and you see it in Figma. And I think it's because we really had three conditions met in the past year. The first one was we had stability in interest rates. That kind of started at the end of last year when the Fed said that they're not going to raise anymore, started to cut, and now forecasting to cut some more. So first thing was rate stability. I think the second thing that we got was we had a public market that is relatively stable.
And at records.
Yeah, all at records, and with a VIX that's at a 12-month low almost. So stability in the public markets despite the bump in April. And I think the third piece that we had was we had companies actually go out successfully. We had Circle, we had CoreWeave, both those are up big. And we also had smaller companies like eToro and Omada Health that performed very well in the public markets. And so those three conditions, I think, set up for a really exciting back half of this year.
A lot of those had flavors of regulatory tailwinds when I think of crypto, or the AI trade that just keeps on being a winning formula. Do you need those within the portfolio companies to go public, or do you just need to be profitable, revenue generating?
I think you need to benefit from some of those trends that you mentioned before. I mean, I'd point to Figma, which, as you just discussed, raised its range. It's not a pure AI play by any means, but does and will leverage AI and its capabilities. And I think that that helps promote and will help pricing of these companies as they go out.
Matt, it's really great to have you back on the program. We were just reflecting on the mechanism that Figma's using. We're calling it an auction-like mechanism where they go to prospective investors and they say, well, how many shares do you want to buy and what price would you set? Which I'm not as familiar with, but if you are like a late-stage growth investor, right, you're almost like an anchor investor going into some of these companies pre-IPO, how do you respond to the auction, so to speak?
Well, I think you have to respond to where the market is setting the price. And I think that in today's environment with, as we discussed, a market backdrop that is kind of at all-time highs, the response that the collective group will make, I think, is such that it will continue to raise pricing expectations for high-profile companies that are benefiting from AI to some degree, like Figma.
I called you an almost like anchor investor. When Wellington's name comes up in my world, it's kind of like that late stage that's pre-IPO. Is that your strategy, Matt?
That's right. Let's find the next generation of great public companies and invest in them while they're private, because these companies 20 or 30 years ago, companies like Figma would have been public. They would have gone public at $1 billion of market cap and grown to the 18 billion that they're now raising their expected market cap to, and done that in the public markets, not in the private markets. But if you look at how the market's changed, the market has changed such that these companies are staying private longer, not foregoing an IPO, just delaying the IPO. And that's the role that we can play, is to help those companies go from great private companies to great public companies.
I mean, Klarna, we all still wait and we watch, and that's in your portfolio business. But what I'm really interested is, as a late stage investor, what are the metrics now? Because these companies fueled by AI are growing at such a rapid rate that suddenly they're already 100 million ARR generating in but a few quarters. What meets your criteria?
I think it's a great question, and something we talk about a lot, because as you point out, AI is just fueling so much revenue growth at unprecedented pace. If you think about a company in the model space like Anthropic, they're rumored to have gone from $1 billion of ARR to $4 billion of ARR in 6 months. So 4xing their business at scale. So what do we look for? We are really focused on companies in the AI space that we think can be both durable and defensible. So durable meaning, can these companies be ongoing businesses, not in 6 or 12 months from now, but in 5 or 6 or 10 years from now? And then defensible, can they build on top of something that is not easily copyable?
Right. And then I think of DataIQ, Glean, Vanta, some of the rounds you have recently led. A lot of it's in the enterprise. Is that really the sweet spot at the moment, how we bring generative AI productivity into enterprise rather than consumer for you?
I think that is a really key observation, which is how does the enterprise software stack benefit from AI and really leverage AI?